Hi everyone, it's Stuart here again. Welcome to Wednesday. It's the 10th of September, and we got US producer price inflation coming out, or producer price index, the PPI data coming out in about 15 minutes' time, isn't it? Yes, at the bottom of the hour. So I hope you're all well. Hope your train's gone well. We had some glitches with the platform yesterday. My demo account here won't keep my lines on my beginning of the day, end of the day, pre-market high, all that sort of stuff. It keeps dropping them out. It's saying anyway. I've got some technical problems, but anyway, you can see today the Aussie is leading the forex markets today. The Aussie's up 5 days in a row. It's a 15-minute chart. Let's have a look at the hour daily chart. So Aussie continuing to accrue, and we've been over dot 66. So the pivot through dot 65 has held, and we're through 65 and a half, and now we're at dot 66. So Aussie having a good run this week. You can see here with this, this is the the triple exponential move. Now it's the TEMA, the blue line here, the one that's closer to the price action, and the AMA, the moving average adaptive. Oh, you can't see that, can you? Let me just a different setup we're using today. Because again, my templates have all been disrupted as well, but not to worry. So you see here, daily chart here, the MACD, technically we were long here on that cross. We went through here on that chart there. So that would have been an entry using this crossing MACD signal line and the crossing TEMA and the moving average adaptive as we moved higher here. So this has been long since the 27th of August. May have been stopped out if your stop loss had been moved up too high. But let's say we're into our fourth consecutive move higher for the Aussie against the weakening dollar. Kiwi's also higher this morning, 59.38. We trade at the moment from this lows under 59. 59.59 is through around about, we're just gone over, haven't we, last couple of days. There we are. Big lift on Monday, big lift on Friday. And support down here at 58.50 sort of zone. 58.40 was the low, and then here towards the end of August we went all the way down under 58 itself, or just shy of 58.1 we got to before we moved higher. So Kiwi up as well. Dollar CAD, the other big commodity currency, obviously on the lifted by the news yesterday of the merger between Tech and or the proposed merger between Anglo American and Tech, creating a big new copper producer, fifth biggest in the world. So CAD also up. We had a glitch on Monday to the downside, but the you see here the flat adaptive moving average is showing lack of it's sort of counteracting this down in this upward move, but here. Up yesterday and then up again this morning. Euro is eyeing again the key 117 area. Let's keep this set up for. I'm not sure which layout's working. Let's keep this set up. For this bit of data. We'll see the data. I say in 5 minutes' time. So Euro's up. We've been over 117 this week. Excuse me, quite significantly through here. So 117 is holding so far today, but we've come down to the 15-minute time frame. We've been lower, big decline, a bid for the dollar yesterday, and now we're into this 117 area here. You can see on the 15-minute chart, and you can see the sort of bit of a triple bottom forming there. Under 117, 117.90 is that floor there on that 50. So bounced off. But as you see here on the 15-minute chart, we've got this channel now here. There's our top. There's our floor under 117. And then we got the 117 area. So we're bouncing between outcome, crashing into this 117.20 zone. And can you really see that? Okay, yeah, I'll leave that on there. And down. So at the moment, the platform's actually hanging on to my line. So hopefully this might hold. But you see we're literally pivoting through. There's 117. There, if I put that on as a as a ray or as a line. I don't know. It seems to be the rays it was being upset about. So there's 117 for euro. So as you can see, we're biased above it there on the 15 minutes. So here, this would have gone long there, reversed out and stopped that. So that there with this strategy on the size of the candle on the 15-minute would have gone short there. If we come back down to the 5-minute trading time frame, there's that big short having been long. So that's gone. So that is now currently short at 10 past the hour on this strategy. The ATR is about 4 or 5 pips. Yeah, 4 pips on a 5-minute euro dollar trade. So long, short, out the market, nothing happening. Triggered long. So you've got long there, moved up. Your stop loss would have been down here. You'd moved stop loss up to here. And that would have so you wouldn't have moved, but you would have moved it a little bit. Sorry, you would have moved your stop loss there, and then it got stopped out on that one as it's turned around. So rejection of highs, 117.10. So, but we're currently 5-minute traders using this strategy, guys, are currently short from here under 117. So 116.96. We've been as good as 116.90. So we've had 5 or 6 pips to the good. Is it going to maintain? We'll see when the data comes out. Data's about to drop in 5 minutes. So let's have a look at the calendar for today. Gold remains bid today on the weaker, even though the dollar's picked up a tad. So yesterday's big news, as we were saying when we were live, was this huge revision of the payrolls data. Nearly 1 million jobs overestimated from to March 2025. So it's obviously all backdated. So obviously the big argument now is, well, and this is what Scott Bessent said yesterday on, I think, CNBC, where he was interviewed with, that, if you knew this data, Mr. Fed, Mr. Powell in particular, would you have acted earlier? Not, hindsight's a great thing, isn't it? And so probably they would. That you would expect to have raised the spectre of a 50 basis point cut next week. It's a week today, 17th, remember. But it hasn't really. We're actually, this is the 17th of September. This is next week's cut. Where they are cutting. It's just how much. We now have an 8.2% chance of a jumbo 50 basis point cut next week. So there's still speculators out there and say, even a week ago, look, this was negative. This is nothing. Yesterday, this is again after the data had been. It was at 7%. It's gone up to 8.2% today. So we'll see if that actually follows through. So markets are now pricing in more cuts over the next 12 months, from September 2025 to September 2026, 5, 6, some are talking about. How they actually get into the market, we'll see. Obviously, there remains the issue of the inflationary impact of the tariffs, which still seems to have dropped off a lot of the narrative that we're seeing in the press. If we go to the next meeting, which is 6 weeks later, at the end of October, we've got a 6% chance of a massive 75 basis point cut from where we are now. Remember, we're at 425 to 450, and so a whole 75 basis points, 6% chance of that happening, according to people have priced, have taken positions, taken contracts in the futures market with that situation by October. And you see it was up from yesterday, and again a week ago nobody was really in that ballpark, but expectations are another 25 basis point come October. So let's just go back to today and the immediate moves today. So PPI unusually ahead of the CPI data this week for some reason. I don't know why. I'm actually trying to find out, but normally it comes the day after. Obviously, something to do with the Labor Day holiday on the 1st of September last week. So 0.3% for the month. Annualized data running around about that 3% as well. Remember, 2.9% was the CPE, 3.1% for the core CPI tomorrow. There's that expectation for the core CPI tomorrow, 3.1%. Headline 2.9%. So, anything, if this starts moving towards that 3% as well, or this comes in hotter at 3.1, even if it comes down, as we were saying last week about the non-farm payrolls, the range is a key as well. So if we're down at, so if the core tomorrow for the CPI comes in at 2.8, that'll just, the White House will burst a blood vessel if we don't see a significant, or not significant, even if they only cut 25 basis point next week, which is probably what's going to happen. It's what the facilitators, what the rest of the board are talking about. Are we getting more hawkish? Are we going to look at potentially 2 more 25 basis point cuts before the end of the year? But having taken a step back, remember 2% is the central bank's target, but it looks like this 3% it's getting from 3 to 2% has always been an issue. History shows us that with inflation, and it's the same in this cycle also. So hence, longer term view is continuing weaker dollar, and hence we've seen this massive rally in the gold price. I think it's up something like 40% this year, but massive moves in gold. Gold's stronger again, holding on to its day to day. So the data has dropped. Obviously, this calendar unfortunately doesn't update automatically. So let's just have a look what that's going to show us. Dearie me. Drives me mad. Here we are. PPI. So it's weaker, in fact. 2.6% on an annualized basis on 3.3%. This is going to go, they are going to go spare in the White House, because remember, producer price inflation feeds into consumer price inflation. So this is saying it's weaker than expected. The monthly number, it was actually negative, the headline, minus 0.1%. Last month was also revised lower from 0.9%, just shy of to 0.7. That's a significant revision as well. The core is also negative on a monthly basis, and the annualized remains at 3.5%. For some reason, it hasn't dropped, but weaker numbers there. The taking food and energy out, 2.8%. Wholesale inventories, interesting to see what they look like later as well. It had this front loading still, is it running? So weaker PPI. So that should have, I was about to say, that should have weakened the dollar. And now you're into this gap jump in the day to day. And there's a really good example of what you might have expected. So our short, again, this is the risk, guys, of trading ahead of the news, okay? And not, this is the major news of the day, and this is the risk we have. So we were short. This strategy would have been, if it was trading still, big negative candle, it would have been short here from 116.96. Our stop loss ahead might have been pulled down to just above 117, because it's a big round number as we continue to move down. This is the final 5-minute candle before the news, so it was still looking quite positive. Might have even pulled the stop loss down here, but whether that stop loss got filled at 116.97, as it shows you there on the let's make that a bit bigger, as it shows you there on the chart. There you can see that's there. So we pulled it down. Whether that had been filled or not is obviously really questionable. In fact, it wouldn't have been, because we've moved up here. So a big move back to the new high of the day, 117.25 being breached, 117.25.8. So dollar weakened immediately. And again, if we go back to the minute chart, you can see, data's come out. It's nice and short here. If you were shorting it down, moving lower into it. And again, that's the risk of trading in news, my friends. I mean, if you bought down here, well done, congratulations. If you've been filled at 116.19, you got a 30 pip move on that data to 117.20. Congratulations. But I'm not really a news trader. It's not something that's my bag. And which is why with our standard account, we always say don't 2 minutes before. So there's the 28 candle, and 2 minutes after, keeps you out of the friction, basically. So there's the window. So if I just make these, get rid of these, because the system's not letting me have lots of lines on. So there's the 2 minute window, you wanted to be out with the standard. I mean, if you want to obviously trade the news, I mean, I know a lot of you do trade the news and are news traders. That's all well and good. I say it's not a technique or an approach I've taken, to be honest, over the time, but that's just me personally. So obviously you're not interested in this, but the most of you with the standard account, you don't want to be placing, or you're not allowed to place new trades in this 4 minute window. You can certainly close your short in that window, but obviously wouldn't have been quick enough as it's moved up, or you're long or got grabbed along. You can't actually open any new positions in that 4 minute window. Now you can, okay? And what we're saying, well, we are biased upwards, but the 5 minute, 2 minute is crossed positively. So happy to buy now at this, 117.12, 117.13 zone to the upside. That's the previous high of the day. This is our now new high of the day post the data. So you would expect the dollar to weaken, and you would expect gold to have moved up, sterling to have moved up on this. So remember, we've got the ECB tomorrow as well as CPI tomorrow, and they're not looking to move rates. So the move higher for the euro may continue. I mean, people were talking 120, weren't we, not that long ago? So this hourly chart here for the euro today is flattened out. There's the 117. There's the key support we've seen this morning. And so, I say as a 2 minute and 5 minute trader, I'd be happy to take that long on that data to the upside. So, sorry, let me just go back to the hourly chart. So that 116. Let's move that candle. See, that's the way we've spiked to the new high of the day. Yeah, so that's where we closed yesterday. Down here, we were trending down. We moved up. Pre-market high was here. Our pre-market Europe open was here at 117.15. So that's been moved higher, and 125 is our upside target. So I'm happy to be long that on a short-term basis and keep the stop loss nice and tight. And we've seen that cross. So we've seen the cross in the 2 minute time frame. Big cross, obviously, as the news is broke. The 5 minute cross will have occurred as well. Interesting. There we are. So there's on the data itself. It's given some back now. 10 minute has not yet crossed, so you're still out, still short, but you're being stopped out. So seeing where that's going to settle, but certainly long has been the initial reaction. We may give some of that back as more data, more absorption of that data moves on during the day. But that was quite a significant move. As we said, Aussie was the biggest gainer this morning. Seeing what sort of impact that's had. Where's the Aussie dollar? Aussie dollar here. Big positive candle still there on the 10 minute chart. 2 minute would have given a bit back. There we are. But Aussie 60. Where did we get to? We got to 66.24 before we started selling off. But dollar weakness across the board there on that weaker than expected PPI data. And so expectations now, could we see a significant miss for CPI tomorrow as well? Elsewhere, I'd say gold's been bid this morning, 3,644 at the moment. We've been higher than that, but let's just go back to the hourly chart. So we were up yesterday, new all-time high at 3,675 yesterday. Dipped into close and then stronger this morning in European trades. 10 o'clock has been our high at 3,657. And we're down in the last couple of hours, but still bid, looking like that might be rolling back down there on that hourly chart. But certainly gold remains on a right old run, as I'm sure you're all aware. There's our daily trade on the gold chart. And you see very clearly there with these moving averages how, if you're trading this strategy on an end of day basis, you are still long gold. A big strong candle on Monday, another huge move as we started the second week of September on Monday, and there's our new all-time high, as we said earlier, 3,675 yesterday. Is at a top, big rejection candle, but we'll see. We're currently engulfing yesterday's quieter day, negative day. but that's healthy on a strong move like this. So gold remains very much bid. Remember, it's a non-yielding asset, even with yields rising. Well, they've cooled that 30-year US yield. Everybody's worrying about getting to 5%. It's cooled quite significantly. But obviously, gold's getting a bid on the that noise about copper yesterday from the merger of those two big providers. Silver, $41 has been we're back to, but again another one. It's not as aggressive move as gold, but certainly very well bid as well to the upside. Bitcoin this morning, or cryptos generally this morning, we've managed to breach and hold that key. Got the daily, that key, 112,000. I've gone back to my, let's use my default there. It's got more detail on it, hopefully. Oh no, it's lost it all. There we are. The new bid system's lost all my chart, all my lines. That's very, very disappointing. Oh, dearie me. Oh, well, there we go. Anyway, let's just go back to the daily chart. You can see gold was, Bitcoin struggling. We went down to 107,000 last week, struggling to break the 20-day moving average for the last 8 trading sessions here. And today we've leapt up. We're back through the key. It's not keeping these. The key 112 handle. Let me just put that on. There we are, getting this delete drawing chart. That's not good enough, trade locker, my friends. 112, 112, 123. There's that 112 pivot area, resistance area as we were going up. And that's been our resistance right through the 20-day there for the last, as I say, these last what's that, 1, 2, 3, 4, 5, 6, 7, 8, yeah, eight sessions. As we'd been down to test the 107 area. So 112 was the key resistance, and we're currently through it today. So good day today for Bitcoin. If you're bidding on an intraday basis, it's been a strong move today. Nice big breach of the 20 there at 7 o'clock, and then the 8 o'clock candle was a nice big, strong, wide-bodied candle again through the 112,000. Bit of retrace, and then another strong candle now on the weaker dollar and the weaker on that PPI data as well. So Bitcoin remains bid. Next upside target here from an end of day basis would be the 50-day moving average at 114,500. Next upside target for Bitcoin on a shorter basis, the 4-hour basis, the ATR. So that's how far it moves typically every 4 hours. Is about $1,000. So you can see that 988. Hope you can see that. So strong break through 12,000. We've already got to 13,000. Strong 3 candle set up there from that floor. So that's, I would be happy to add to that. Obviously, wait till that candle concludes in 15 minutes, but that's a strong bid. We found a bit of resistance where we are now. You see that? There we are. So let's see where this candle finishes. If you're a 4-hour trader following the rules, you would have added a new position on the cross here at 10 o'clock this morning, and you're in the money nicely into a key resistance area. So you might have taken some off the table there. You see that? There we go. So a bit of fresh air above there. Next resistance takes us to there. 115,000 is the next upside target for 4-hour traders on Bitcoin. And 1-hour traders, again, long this morning at the 8 o'clock candle, retrace and move higher. And again, you can see the upside target potentially 14,000 initially, if we can hold above these previous highs. But that, again, could form, it's not really a triple top because of the distance between them. But yeah, it's looking relatively positive. For crypto today, on the certainly on that week of PPI data, oil prices have been sort of all over the place. We've had the attack in Doha on Israel, on Hamas members. Saudi Arabia not happy. White House not happy. But Netanyahu continues to bang on and plot his own drum. So worry about oil supplies has lifted the oil price back, certainly still shy of $65, but we're at $65.50 from lows earlier in the week under the key $62 support level. That was Friday, wasn't it? Yeah, Friday we went under 62. So we've been rising since, but a real sort of congestion area again. We're in now at 63.50. So 64 looks like a step too far at the moment, but we're certainly bid here on the hourly chart, supported by the 50-hour, 4-hour similar move higher from the low here under 62, moving higher again. That triggered a trade into close on the 9th yesterday. If you're an oil trader, again, bit of resistance here. Next target would be there, 63.75, and then the 50 period here on the 4-hour is at 63.85 to the upside for WTI, up nearly % today. Indices, we still got lots of open trades. Have obviously all dropped off the restart of the systems, unfortunately. We went long the Dow yesterday. I think the Nasdaq was still open. I need to do some homework and get over from my trading platform. An update from last week. I didn't do an update, but there's lots of open positions at the moment. I think I'm nearly fully risked on at the moment. Trying to think. Yeah, UK, the SPX, Nasdaq. Lots of the 7 posts from Friday, Monday. I don't think there's anything, and I'll post it on the WhatsApp group, or the Discord group. So I'll bring that up in a minute. So what's this? Is WTI? Sorry, we're looking at the indices. So SPX, this S&P 500. You can see here. Go away. New all-time highs. Yesterday into close. Oh dear, that as far back as it goes. Dear me, obviously 11th. I'm going to have to work with the bosses. Anyway, it has got this. Oh, it's held some of my lines, but not all of the lines. So anyway, that was the our entry into on the 4th. The stop loss was didn't get. It looks like it got hit. Didn't actually get taken out. It's just shy of 6444. We were, and there's no actual target was set for that, so we were, so we're in the money on the S&P 500. The Dow we took was that last night? I can't remember. The Dow was last night, yeah. So that was just here, and again I'd put the lines on this chart, yeah, last night when we took it. I'll show you the note I put on Discord for this. Here we are. Trading strategies. So again, I need to update of last week. Sorry, this was Monday. 8 positions. There's the SPX we added again on Monday, having been long from on Friday night as well. And is that not target set? So we went along again on Monday night. These are the trades as well. I'll have to update. We had a very, as I've written last night, a very interesting week. Last week, I do up to date some big numbers to the downside. So the Dow we were long last night, and we were short dollar yen, 47.90. I think that's still. We'll have a look at that in a minute. But anyway, so yeah, the stock markets we are along. I knew the one we got into last week was the FTSE, again out of the money initially, but that's from the 4th as well. It's interesting. It's kept some of these. Obviously, it doesn't like all the lines out on my platform, and I'll restrict how many I'm put on now, which is a bit of a pain in the neck. But c'est la vie, as we say. That's trade what you've got, not what you think, not what you've got in front of you. So that's in the money as well. The FTSE, the DAX we trade on a short-term basis, and the Nasdaq 23,970. It says Nasdaq there, still the Nasdaq 100. But again, new all-time highs yesterday, and was up again today. I think how far is this? Got the weekly chart. There we are. Still bid to the upside. It's a strong recovery from the the worries over tariffs in April, and off we've gone and running. And I think there's not a Nasdaq position open. I have to look at the data. Okay, so stocks bid. Energy's coming back on worry about over the rising tensions in the Middle East. and gold remains bid on all sorts of reasons. Indices also bid, and the dollar generally weaker, as we've just seen. USD majors again; these are all clumped together now. So sterling over 135, euro back over 117, and holding that. Actually, it's come off a bit, hasn't it? From the hello. Well, that was from yesterday, wasn't it? On this, so it's held some. If we go back to the 5 minute time frame. So there's that move higher. Interesting. It's held these, and it's come back down. But we're still holding 117. That's the key thing, as we saw on the other platforms. So just go back to the one we were using, which is our TEMA and MA on the 5 minute, not the daily. We go back to the 5 minutes. We were long that, weren't we? Let's come back and it stopped us out actually. As we've come crashing back through both lines, and we're back to flat. So that's actually, I bought this up here. That was a losing position on the reaction to the trade. So that big down candle might have been enough. Stop loss might have been about there on that move. Split the difference. So probably need to see this gap filled, guys. So an interesting way of looking at this going forward. The variance of the news data, and you can see. So this is week. So within 5, 10, 15, 20 minutes of the of data being released and absorbed, we've retraced 61, the key fib level of that data. So that now is back short again, or looking to go short. We have yet to cross these. For this strategy, it would have yet to cross. Certainly the long was a losing position and stopped us out. So look at how else others ways. The Bollinger Band stochastics, how would that have come in on a 5 minute basis? It's more of a mean reverting system. So again, you see that was short down, and it's blown out. So we're looking to go long this one. So that's blown out of there. So we're looking to go short. So we'd have gone short there. First target would have been, so that would have been a successful trade, although it would have also triggered. The way this one works, that would have been it's looking for a reversal. So there's the reversal entry, having broken above the top of the Bollinger Band. That would have been your entry as the stochastic has actually crossed the other way around. Interesting to go long. But anyway, the short would have been there. There's first target, and second target would have been down here at the other side of the Bollinger Band. However, the stochastic here, remember we used our stochastic at 1063, has actually crossed positively on that turn. So it's delayed because of this gap move. So we're just going to ignore that one. That was also the wrong way around. That was short here. Actually, that did work out and had gone down head of the data. But again, it's the risk of trading the data. So that would have been a successful one. That would have been successful today if you'd closed it out before the data, before the news broke on the 5 minute, which is what we normally do. So that would have that's a conflicting signal there. We've got the rising stochastics, the K and the D, and the the Bollinger Band saying otherwise. So okay, so it's probably stayed out of that if we've got this conflicting move. MACD parabolic SAR, the other setup that's still functioning here. Let's go back to the 5 minute chart. What would it have been telling us? So unsurprisingly, we'd have gone. It was choppy as it is with 5 minute time frame. So that would have been short there on that blue on that. So it'd have gone short there, and then it's flipped to go long here, and it finally flipped. It's flipping short now, if that makes sense. So there would have been some losing trades there, but that's looking to go short now. You see how the parabolic SR has flipped. We've got a cross in the on the MACD and the signal line. This is the wrong setup. This should have stochastics on it, shouldn't it? Let me just add the stochastic indicators. Stocks. No, it is MACD. No. These two setups. I've done this for so long. No, that is so. That's choppy, obviously, here in the 5-minute time frame. It's a bit higher time range, a bit smooth, but you can see there it's sideways. There's that sideways euro action, flat there on the hour. So it's really directionless in the higher time frames. So hence the much more choppiness down on the 5-minute and 10-minute. But so 5-minute looked like it was going. In fact, it has gone short there. Yeah, so that's gone entry there at 116.96.9 short. Is that current position on the MACD and parabolic SAR setup? Target 7.5 pips, or call it 10 pips. Okay, guys, that's Wednesday for you. Major surprise showing continued softening in the inflation outlook. The as I said earlier, the White House will be going ballistic on this. 2.8% for the headline number from 3.4%. Also revised lower from 3.7% last time. So the Besant, Trump, Lutnick all be banging. We told you so. We told you so. Get these rates down quickly. And obviously the issue is, we got Waller and Michelle Bowman had voted for the bigger cut in July. They're still there. Will Stephen Mirren be there to the member of the parliament, if you like, the member of the government? He's keeping his government job, and he's going to be on the Fed. Just seems madness to me when we're talking about independence. But there we go. That's the world of Trumpism we live in, and obviously then the situation with Lisa Cook, who the president is trying to sack, and she's not going anywhere. Will she actually be Supreme? I think the court yesterday found that she was okay for now, but obviously ultimately the Supreme Court will side with the president, unsurprisingly. So that's got a way to run, but will she be there next Wednesday? It's looking like it at the moment, and she's maybe looking for a cut as well. So, but it looks like it will be obviously clearly a universal 25 basis point cut. It's how much discussion takes place, and again, we won't find that out officially until the minutes have come out. There we go. Remember, guys, we've got promotions running in July. If I just take you to our next page. So you can get a $10,000 account for the price of a $5,000 account. Where is it? There we are. These are the quotes. Let's bring in my the Twitter feed, X feed. There we are. Use code 5 to 10 to get your $10,000 account for the price of a $5,000 account. I'll get $50 off a $25,000 account. Remember, guys, these are time limited promotions. Lots of people this morning were showing us the bigger discounts we had at during August, but again, they're time limited. So 5 days to get this promo. How do you do that? Well, you go to our website. Here we are. Go to our website, go to our evaluation page, decide what sort of step phase you want to trade with the proptrade.com. I know many of you like the Express. It gives you the idea to be able to trade trade the news. There's no consistency rules as many prop firms have. So if you want a say $10,000, sorry, you want a $10,000 account. If you go 5 to it gets you apply. This coupon is only available for credit. So there you go. So you get a $30 discount. So instead of it being $85, it's $55. Okay, so you're getting a $10,000 account for $55. If you want a bigger account, which again I would, 25, 50,000. If you can afford it, get them, guys, because you have much more equity to play with. Remember, there's no lot rule now. With the margin rules are very, very explicit now. That 70% margin rule. So other codes that are still working. So if you're new, 25, that gets you a 25% discount across all our products. So $25,000 one-step express account is $175 normally. With 25% off, that brings it down to 130, gets you a massive amount of equity to play with. 12% is the profit target, 7% is the maximum loss. You've only got that one step to get through. No more than 4% on a daily basis, no more than 3% on a particular trade idea. And there's some, again, rules around that. Don't want to be re-entering. You can re-enter, if trend is running, that's not a problem. But after an hour, you can use, I'll use different approaches to still follow the same trend. Like I've got those different platforms. That's still a separate trade. So have a look at it. Give it a go. Again, news trades allowed. Trade over the weekends if you really want to, guys. Crypto trading over the weekend. Not my bag, but it is for some people. And 12%, 3,000 profit is what you're looking for on a $25,000 account. $130. Come and give it a go. We're here to help. I'm here to help. The rest of the team are here to help. And the directors are always open to new ideas as well. So take care. I'll see you tomorrow for the CPI. Obviously, we got the ECB before that. So watch that euro. We are now back under 117, 116. 98, only a pip and a half. Now we're back over 170. I can see that there. So take care. See you all tomorrow. Be good, be safe, and may the pips be with you, my friends. All the very best. Bye-bye. I've just seen a question here just before I wrap up. VGP, is this good for crypto? It certainly is a great platform for crypto. As I said, crypto's bid at the moment, my friend. I don't know how long you were here for, but you just joined us. But 113,000 here you can see on this 5-minute chart. That's a strategy that's bid there. There we are. That's a classic move. So this strategy went long there on the cross of the. You can see the cross of the MACD signal line. The parabolic stars flipped from above to below, so that's been long from 12,390. Yeah, the spreads are actually, spread's not too bad. Actually, $200. No, it's a bit low now. What I'm talking about. But that's it's 5-minute chart, so very much in the money there. So you're still up. Again, the way to trade this with this one, you can have your stop loss where the parabolic SAR is. Sometimes it gets a bit close, or you just count the candles back. But if I was trading this, my stop loss would be there now from an entry there. I've guaranteed a gain. So I've got in here at 12,300. Stop loss is 12,800. Take the spread off, and very much in the money. Thank you very much. Nice trending strategy there on the 5 minutes. So VG, hope you're with us. Hope you're trading. If you're not, drop us a note on the Discord group. This is the trading strategies where I put my end of day trades, in particular, not all my intraday trades, but the general chat area. We've got a great team supporting you guys. There's Johnson typing away. Ask the question at 18, he gets an answer at 20. Ask the question at 35, gets an answer at 36. Ask the questions at 37, gets an answer at 38. There we are. We're there all the time. Johnson, Katzen, and Thompson. If it's not one, it's all three. But you will get support there as much as we can. And say we're here to help you. So take care. See you all tomorrow. Be good.